Hello everyone, I hope you are doing well. Can you please confirm if I'm audible? Fine, so it's audible. Fine, so if I'm audible to all of you, please give a thumbs up in the chat box. Please confirm if my voice is clear. Fine, so thanks for the confirmation. Now, without wasting any time, let us begin with the session. So, hello everyone, welcome to another session of Perspective 360 Degree, where we do current affair based answer writing practice in a detailed and structured manner. And if you are an aspirant preparing for exams like RBI, NABARD, etc., then this session is definitely going to help you with answer writing practice for the descriptive paper of phase 2. So let us begin with the session, and as you would be knowing that the topic that we are going to cover today is the central banking in the 21st century, changing paradigm. And why we are discussing this topic, what is the context of this news? Basically, if you talk about this year of RBI paper, RBI phase 2 paper, then we have seen that there was one question that was very much linked to the speech that was given by the deputy governor of RBI. Fine. So with that, I have decided that if I find any such sort of topics that are present in the speech given by the different personalities on the that are mentioned on the RBI's website, and if they are relevant to your syllabus, then I will try to cover it. Fine. So this is the context of the news is basically the RBI bulletin, and since this topic is aligning with your syllabus, and that is why we are covering it today. So that is the reason we have chosen this topic, and I hope it is clear to you. And this is the question, expected question for today. And if you are new to this Perspective 360 Degree initiative, let me tell you that here firstly we give you an expected question, and we are going to discuss the expected question as a part of this session. And once this session is done, then you have to write the answer of this expected question in the comment box that will be evaluated by our team within 48 hours. Fine. So that is the idea, and this whole initiative is free of cost. And as I always discuss in my class, this is the answer blueprint that you need to follow while writing your answer, where you will divide your answer into introduction, body, and conclusion. And we have discussed this multiple times that introduction should be around 10 to 12% of the total word limit, and the same rule applies to the conclusion also. The rest of the word limit should be dedicated to the body part, where you will write your body in the form of heading and different subheadings, and you will try to substantiate it using the data, facts, or example wherever it is applicable. Now moving on to the discussion for today, let us talk about this question that describe the key challenges faced by central banks in the 21st century and suggest possible solutions. Now all these challenges that we are going to discuss today, I have taken from the speech that are mentioned in the RBI bulletin, and that is going to be the fundamental basis of our argument regarding this whole question. Apart from that, what you can do, of course, you can add some additional point also, whatever you are able to think of, and that would suffice for this content. Fine. Now let us move on to the first part, which is basically the introduction. So since the question is asking about the recent context regarding the 21st century challenges faced by the central bank, so we can start our introduction like that. The central bank in the Vikash is saying voice is breaking. Is anyone else facing the same problem? Is the voice still breaking? Please confirm it for once. Please confirm it for once. So it's fine, I think, because there is some problem for you from your side. So we can start our introduction like central bank in the 21st century face significant challenges shaped by globalization, technological advancements and evolving economic conditions. Then with the increasing complexity of financial markets, the role of central banks extend beyond traditional monetary policy to include maintaining financial stability amidst crisis, adapting to the growth of digital currencies and managing cross-border capital flows. So what we are trying to do that trying to say that the role of the central bank is not just restricted to the traditional functions, for example the price stability, the monetary policy, also sort of things, because with time what has happened, the economic scenario that is there in our country, not in just our country but at the global level also, because of the impact of different factors that we are going to discuss very soon. And because of these factors, what is the need of the hour? The need of the hour is that central bank should also diversify its approach. It needs to make its approach more broad so that it can tackle different type of challenges. So what are the different type of challenges discussed in the RBI report? So the first challenge is regarding the balancing of price and the financial stability. So this is a big challenge, because if you talk about price and financial stability, basically this point wants to talk about the inflation which is linked to the price and the financial stability. Now what is the challenge with respect to it? The challenge with respect to this, as highlighted in the bulletin or the speech, is that when the inflation is low, what the central bank does, central bank basically they focus less on the regulatory vigilance, and this allows the vulnerability to build up. How the vulnerability starts getting building up? Because when the inflation is low, what might happen is that because of the monetary policy decisions of the central bank, the interest rate in the market are also going to be low. The low interest rates are going to be there, and since the interest rates are low in the market, what is going to happen? It is going to encourage excessive borrowings. And since it is going to encourage excessive borrowings, what it is going to lead to, when the excessive borrowings are going to happen at a huge level, it might lead to some sort of financial instability. So this is just one side scenario, that when inflation is low, there is some probability of occurrence of certain kind of disruption in the market, certain kind of instability in the market. Now what is the second side of the scenario? The second side of the scenario is when the inflation is high. So when the inflation is high, what the central bank is going to do in order to tackle it, it is going to encourage tight monetary policy. And because of this, what is going to happen? There is going to be increase in the borrowing cost, and also since the borrowing cost has increased, it is going to impact the loan repayment capabilities of different individuals and businessmen, and it is also going to affect the asset values, also different type of assets that are there. And what is it going to lead to? Again, it is going to trigger the financial stability in the market. So what financial instability in the market? So what basically we can conclude out of it, that in case of low inflation, in case of high inflation, in both the scenario, there is a probability that the economy might face certain type of vulnerability. Fine. So what is the job of the RBI? This becomes a challenge for the RBI. So what the RBI has to do, RBI or any kind of central bank that is there, it has to maintain some kind of balance, that the inflation is not too low and the inflation is not too high. Why is it so? So that the price can be maintained in the market, the price stability is there, apart and along with that, the financial stability is also maintained, and the growth and development can also happen in the economy. So this is the first type of challenge as highlighted in this bulletin. Fine, and I hope it is clear to you. So if I read the lines for you, so the interconnectedness of price and stability has emerged as a significant challenge, and periods of low inflation can create complacency. Complacency means the feeling of self-satisfaction. Fine. So what does it lead to? It potentially leads to the financial instability. And how does it do so? We have already discussed that. I have told you. Then while addressing high inflation, what does happen? Through aggressive monetary policy, it can strain the financial sector. This dual focus requires a careful balance to manage the risks in an effective manner. Fine. So this is something regarding the first point. Now the second point is regarding the monetary fiscal coordination. If we talk about the monetary policy, and if we talk about the fiscal policy, Now we all know that monetary policy is a tool that is used by the RBI so that it can control the money supply, fine, and it can control the interest rate that are in the market. If we talk about fiscal policy, basically for the fiscal policy, the tools that are used by the government are basically the government spending and the taxation. Fine. Now the thing that this report this bulletin talks about is that there should be a balance between the monetary and the fiscal policy, and how this balance can be generated, we can understand it with the help of an example. So in this speech, the bulletin talks about the example of COVID-19. So during COVID-19, what happened during the COVID-19, there was a great balance witnessed between the monetary policy and the fiscal policy. What happened with the help of monetary policy? With the help of monetary policy, the RBI maintained low interest rate in the market. Low interest rate in the market, and what did this low interest rate ensured? Basically, these low interest rates ensured the sufficient liquidity in the market. Fine, they ensure sufficient liquidity in the market. And at the same time, if you talk about the fiscal policy, that is from the side of the government, the scenario regarding the fiscal policy was that the government provided a huge amount of fiscal support. So you can see that there is some kind of interconnectedness between the fiscal policy and the monetary policy. Monetary policy is lowering down the interest rate so that more liquidity can be pumped in the market. Apart from that, the government is also doing the job. The government is also enhancing the fiscal support. And what did it lead to? It basically led to, during the COVID-19, it basically led to manage the demand supply issues that are there in the market. Now imagine if the monetary policy is increasing the interest rate and the government is decreasing the fiscal support. So don't you think this mismatch is going to create a lot of hurdles in the economy? The answer is yes, and that is why the bulletin talks about that there should be a monetary fiscal coordination, and which is a challenge but is doable as far as the past experiences are concerned. Fine, so this is what this point talks about. Now let me just go through the lines that the recent crises have highlighted. So the crisis that they are talking about is basically the COVID-19 crisis, have highlighted the value of coordination between the central banks and the government. Fiscal policy can complement monetary measures, as seen during the pandemic when fiscal support helped ease inflationary pressures without compromising the growth. And this close cooperation between the fiscal policy and the monetary policy, it basically addresses the different supply side issues. So I hope it is clear to you. The next is regarding the technological advancement. This point is very much easy to understand, because we know that with the rise of technological industries, with the rise of fintech and all such type of technologies, what is happening, the emphasis with respect to the focus on this technological advancements has also become very important. So what the central bank has to do? Central bank has to focus on multiple type of issues. For example, the data privacy, the digital lender oversight. For example, you must have heard about the third party lenders, the online lenders that are there. We need to focus on that. We need to regulate that, because they are more prone to getting scammed. Fine. Then the third party service providers, all these type of areas where RBI or the central bank need to focus upon. Apart from that, we all know that technologies like artificial intelligence, all such type of things are also brought different type of diverse challenges. The next is regarding the climate change as a systemic risk. Now, what do you mean by that? Basically, so you would be thinking that what is the connection of central bank with respect to the climate change? So why RBI or any central bank needs to evolve keeping in mind the climate change? So the thing is that the reason is that because if you talk about the climate change, climate change, what does it lead to? When the climate change happens, the rise in the sea level, the increase in the cyclones, hurricanes, also sort of things, basically it leads to extreme weather events. And these extreme weather events, what do? They basically impact the different type of sectors. What type of sectors? For example, the agriculture sector gets impacted, the energy sector can get impacted, the transportation sector get impacted, all such sort of things as a result of climate change. And since these different sectors, they are getting impacted, as a result, what happens? It leads to disruption in economic activity. disruption in economic activity. Now you can clearly analyze that when these agriculture, energy, transportation, etc. sectors get impacted in the economy because of the extreme weather created by the climate change, what does it lead to? It leads to disruption in the economic activity. Now when the disruption in economic activity happens, what it will lead to? Try to apply the logic. So it is going to basically going to disrupt the demand supply mismatch in the economy. It is going to create the disruption in the supply chain in the economy, and when there will be the disruption in the supply chain in the economy, what it will lead to? It will lead to sudden price volatility in the economy. Price volatility in the economy, and since the price volatility is getting high, what it will lead to? It will lead to rise in the price of essential goods, which basically is nothing but indirectly we are talking about what? We are talking about the inflation. And what it will lead to? It will lead to increase in the inflationary pressure. And since the inflationary pressure is getting increased, what it will lead to? It will make the economy more and more vulnerable. And since the economy has become more and more vulnerable, so don't you think it is going to increase the role of the central bank in the management of the different kind of activities that are going in the economy? Because if the inflation is high, as a result of climate change, what the RBI will have to do, what the central bank will have to do, they will have to adjust the monetary policy. Fine. So that is the idea. That is how the climate change can lead to the increase or evolving role of the central bank. Apart from that, climate change also introduces different set of challenges for the different type of financial institutions. Because basically, if you talk about climate change, fine. If you talk about the climate change basically introduces two type of challenges. The first type of challenge or the risk I can talk about is the physical risk. Fine. The second type of risk that we can talk about is the transition risk. Now what is physical risk? Physical risk is nothing what we have already discussed, that for example, let us say if there is an event, for example earthquake. If not earthquake, let us not say earthquake, but let us use as example of cyclone. Fine. As a result of the extreme weather events. So if the cyclone has happened, and let us say there is some person, let us say there is a huge population whose property has got damaged. Now if the property has got damaged, what is going to happen? They are going, if they have done the insurance of their property, don't you think they have, when they will go and file their claim of insurance to the insurance company, it is going to have an impact on the insurance sector? The answer is yes. So the insurance sector is going to get impacted. Apart from that, if the properties of these people have gone destroyed, if they are facing some kind of financial vulnerability, and imagine if they have taken any kind of loan from the bank, do you think they will be able to repay the loan back to the bank? The answer is no. So it is going to impact the banking sector also. So insurance sector, banking sector, multiple type of financial institutions, they do get impacted because of this kind of physical risk. Fine. Now after that, what we have this transition risk. What is transition risk? Basically it talks about the transition, because as the climate change is happening, so what we are doing, we are moving away from the sectors like fossil fuel to the clean energy resources. But what about those sectors? What about the coal sector? All those such kind of sectors where a large number of people are employed. So don't you think that the demand in that sector is going to get decreased? The answer is yes. And since the demand in those sectors is going to get decreased, what is going to lead to? It is going to lead to increase in the challenges for the banks. Which banks? Which have high exposure to these sectors. So that is the reason how physical risk, the transition risk, as a result of climate change impacts the overall financial institutions in the country. So both the scenarios I hope are pretty much clear to you, that how climate change acts as a systemic risk in the economy. Fine. So I hope you are able to connect the dots. Now let us just go through the lines, how we can write it in a simplified manner. So the climate change poses systemic risk to both price and the financial stability. Extreme weather events can disrupt economic activity and can create sudden price volatility. And what the central banks have to do, central banks are increasingly considering climate risk in their regulatory framework so that they can support the overall stability and can recognize the impact of climate related disruptions. And what is the logic and the rationale behind it, I have already explained you that. Fine. The last point is regarding the geopolitical and geo-economic fragmentation. So because of the emergence of the geopolitical tension, just for the sake of example, we can choose the example of US China. trade I mean the disruption of trade that is there between among these nations. So is this trade disruption or the trade war impacting only US and China? The answer is no. The other countries are also getting impacted. Or if you talk about the different kind of geopolitical factors, for example, you must have heard in the news regarding the Houthis rebel who are in the Yemen, and how they started attacking ships in the Arabian Sea. So what happened because of that? The ships started rerouting, and once they started rerouting, what is going to happen as a result of that? It is going to increase the fuel charges, and once the fuel charges are going to increase, what is going to happen? The goods that they are supplying, the price of those goods is also going to increase, and since the price of those goods has also increased, so what is going to do? Don't you think that there is going to be the inflation in the country where these goods are being purchased, where these goods are being supplied? And since there is inflation, whose role is going to get evolved? The role of central banks is going to be evolved, and that is how the geopolitical and the geo-economic fragmentation, it increases the roles and the responsibilities with respect to the central banking. And what the central banks have to do, they have to remain vigilant and flexible in order to respond effectively to this evolving global conditions. So that is the idea regarding it. Now let us move on to the solutions. What is the way forward that we can talk about? So whatever way forward of the points I have written all the points in context of these points only, so the problems are connected to the solutions. So the first point is regarding the strengthening financial stability during the inflation control. So central banks, they can adopt different kind of macroprudential measures, and they can adopt flexible data driven monetary policy, fine, so that there is some sort of balance between the inflation management and the financial resilience. There is no such kind of mismatch, fine, that we have already discussed. After that, there should be work towards enhancing the coordination between the monetary and the fiscal policy, as demonstrated during the COVID-19 crisis. The same kind of approach should be sustained in the future also, so that different kind of risk can be tackled in an effective manner. The third is regarding the regulating fintech and the digital infrastructure. We have talked about it, that data privacy, the data theft, and with the rise of fintech, artificial intelligence, the digital infrastructure has become a very vulnerable sector, prone to attacks. So what the central banks have to do, they have to keep on focusing on innovation, and they have to enforce data privacy regulation. The cyber security standards have to be increased. All such sort of things have to be done. The fourth point is regarding integrating climate risk into financial regulation. So we have talked about it, that how climate change impacts the evolving role of the central banks. And let me tell you that few months back, the RBI had published a special report with respect to this climate risk, that how central bank has to be evolved as a result of this climate changes. So the RBI had published a report also, and this shows that how RBI is also trying in order to integrate this climate risk as a part of the financial regulation. Apart from that, in the RBI annual report also, if I'm able to recall correctly, then in that report also the RBI talked about this climate risk issue. So that is something, a very important way forward. The last is adopting to global trade and the technological risk. So yes, as we have talked about that, how the geopolitical fragmentation, it increases the role of central bank, and what the central bank need to do, they need to maintain some kind of policy flexibility, and they need to monitor the geopolitical risk in a close manner. Fine, they need to monitor them very closely so that they can adjust the strategies in order to counter their effects. So that is the idea regarding it. Lastly, we have the conclusion that the 21st century presents central banks with an expanded set of challenges requiring a dynamic and multifaceted approach, balancing growth and stability while navigating environmental risks, technological advances, and geopolitical uncertainties has redefined the central banking. So somewhere what we have done, we have basically summarized what we have covered above. Then after that, what is the way forward? Through an expanded toolkit, coordination efforts and fiscal authorities, and a commitment to transparent communication, central banks, what they can do, they can continue to evolve to address these complex demands. So that is something you can write as a part of your conclusion. This is the question that you have to attempt in the comment box, and if you want your answer to get evaluated, then you have to submit it before Wednesday. Today is Monday, so you have to submit it before Wednesday 5 p.m. if you want it to get evaluated. And please start writing your answers, because from now onwards I'm going to keep on bringing the RBI and NABARD related current affairs also, the topics that are there. And yes, apart from that, of course, somewhere we are going to bring classes for the IRDAI, which we are already bringing. We are going to continue that till the phase 2 exam, whatever important topics are there. And that is it from my side. So if there is anything else, you can please ask in the chat box, and these are the EduTap blogs where you can find different informative articles with respect to different competitive exams. Fine. uh, Vidya is saying, kindly frame questions relevant to NABARD Grade A also. Yes, yes. Few days back only, I think white revolution was very much relevant to NABARD. We are covering it, and we will keep on covering these things. Don't worry about that. Fine. So that is it, and thank you so much, and all the best. And yes, if you want anything else from my side, for example, if you want us to bring any you want to give some kind of your inputs with respect to the initiative, so you can give your feedback also, either on this email ID or in the comment box also. I do read all the comments, so what you can do, you can write whatever you want from my side, how we can play a role in your preparation, and we will go for it. Fine. So that is it. Sir, will you be taking some session in IRDI Descriptive? We are taking it just today only. After so many days, I brought this session for RBI. But on Wednesday, I'll try to bring session of IRDAI, because IRDI classes, I mean phase 2 is also approaching. So yes, we'll keep on bringing it. Some session, yeah. Yes, KV. In the course also, we will bring it. We are going to share the timetable very soon. So in the course also, we will take the descriptive classes. They're going to start, I think, just after 15 days. They're going to get started. So do not worry. So that is it. So thank you so much, and all the best.